Hey guys, Mike here. So obviously red day in the market, and there was a couple things that caused this because some of the members and I were in the Discord discussing it as it was happening. And if you saw like a U-turn this morning, you know why. But there's a couple things we're going to go into those as well. But also we're going to talk about what a major financial institution just put out of their top 10 investments for 2023. Because it's good to know what, obviously they're recommending their clients, but also I want to get your opinion on it. Some of them I actually do like. But I always like to start red days off with something funny, right? And so this is a meme hodling through the bear market, what you actually would look like. So let us know in the comments if this is you. And we can't go on until we talk about, Shopify and Black Friday sales. And Shopify comes out and says, man, we set record sales up 17% from last Black Friday. And you might hear a lot of sarcasm in my voice because I'm like, yeah, how about that? That's what everybody's talking about. You know why? You set records, why everybody's setting records, because how much more expensive are things right now than they were last Black Friday? I bet you a whole lot more expensive, 20, 30, 40%, if not more. Okay, and so yes, I expect you to set records, and that's why I think when people pulled back the curtain this morning, that's why Shopify went from up 9, almost 10%, dropping all the way down to like 2 at one point in time, and not just coming down on them, it's everybody, right? Walmart, oh, we did great. Yes, you did because you're charging so much freaking more. That's why. I'll guarantee you when we look at the numbers and start pulling back and taking inflation out, that there was nowhere near as much stuff sold on this Black Friday as was last Black Friday. Could be wrong. Look for the numbers, they couldn't find them. But as they roll out, we'll see. And if I'm wrong, I have no problem admitting it, but I'm pretty sure that's what it is. Just saying. Right? And that leads us into what happened in the markets, right? It's two big things. And like I said, we were in the Discord talking this as it was happening. And it was the Fed presidents rolled out in full force. Bullard was out there, just trying to tear it down, saying, man, nope, we ain't gonna, we need to keep raising rates. We can get up to this percent, all this other stuff. So just really trying to pee on this rally because, like, again, it's the worst thing for them because the one thing the Fed can control with all this tightening is asset prices. And that's what they're trying to do. But if the market rallies like crazy, like God help them, when they know if they say we're going to pause rate hikes, see you later. It's going to go to the moon. They know that. And so they're trying everything they can to stop this rally, really is what they're trying to do. And so far they're succeeding okay. But the market's still like, we want to go higher. I can't imagine it's going to stop now. And the other one was our friend China, right? Shockingly, they're having protests and still doing lockdowns in major cities. And of course, we're going to talk about it. Apple got hit by that because it messes up their supply chains, how many iPhones they can get made, all this other stuff. And you see it in the market. I mean, you look at the S&P right here, and I'm not really sweating. I'll tell you right now, that's where we're at today. Again, this trend right here is what I got my alert set to, and that breaks because we bounced off of it 4 times, I believe. Then you go, okay, we might be heading down, right? But the RSI is still bullish. We're still sitting there like 2.5%. Let me drag this over real quick. Away from, filling the gap, hitting the edge of that descending channel, hitting, let me put the 200 up here for you, there it is, 200 SMA, hitting the golden pocket, everything aligned in once. And I find it hard to believe that big money is going to sit here and go, we went all this way not to hit it, because where is it better to short at? Where we're at now, or go ahead and move up 2.5%, 3%, maybe even more. We'll see. Could be totally wrong, but we'll find out about that one. And Apple, of course, look, the market goes as Apple goes, right? I put this out to the members, I don't know, last week or whenever it was, maybe even Sunday, but, talking about how many times it has just bounced off and got rejected off that descending channel right there and still heading at 200 SMA. And the big thing to watch out for is the RSI. It's broke below 50 today on the daily. And when that happens, if it continues going down, normally when it breaks, you could see a major sell-off if it's going to happen. And if Apple sells off, everything's going to sell off, right? I mean, there you go. There's one right there, 10%. And I bet you if we go back, we'll find another one over here to the left. And almost guarantee it's going to be, I'll say 10%, right? Let's see what we got. Oh, look at that, 10.5. So a little off on that one, but yes. And if that happens, I mean, that's big, right? Because Apple holds so much weight in the S&P especially. So that's something we got to keep an eye on. But what led the way today was the small caps, right? And you can see, I've been showing you this multiple times, it's already broke its 200 SMA, but can't get back above it again, right? And you can see down here, what's the RSI doing? Approaching that 50. And again, it's just like any other stock or index or whatever you want to call it. When it breaks it, you get a major dump. Right? It is very bearish when that happens. And I think a lot of algorithms must be triggered or something because it sells off big time. And so if that happens, that's what I'm definitely keeping an eye on. And you can see, look at that channel it's been in for a long time, right? And I'm gonna touch base now in a minute, but you can see how many times it's bounced off the top and bounced off the bottom. And please don't forget to hit that like, subscribe button, and share this video, guys. And it's just one of those indexes that love to trade in channels for long periods of time. Remember what it did last year? And so those are the things I'm keeping an eye on for sure. And, you know, and you can guarantee I'm not the only one. But, you know, the thing I wanted to get into with you was Bank of America came out with their top 10 investment or trades for 2023. They're basically telling their clients and stuff, and I'm going to go through them with you. And I'll put some input after each one that I actually want to cover, because a couple I'm not going to cover. And then let me know what you think in the comments. And the reason why all these trades or investments are based off of is the fact they think we're peaking at 5.25% interest rate. What they're expecting in 2023 to end with is a 4,000 S&P. And what they're also looking at is, you know, it says we are long U.S. government bonds in H1 with hard landing and credit events risk under price, maintaining an optimal S&P entry points, nibble at 3,600, bite at 3,300, and gorge at 3,000, right? And so that obviously that 3,000 would be a nice drop from where we're at right now. But, you know, looking at the top 10 trades, the first one didn't shock me at all. You're either long 30-year treasuries, long TLT, TBT, and the reason why I'll just go to TLT real quick is, you know, you look what's been happening to this one. This got destroyed this year, right? I mean, it's been in that channel since last year, and I think it's like one of the worst years ever on record or something. And if you look lately, what's been happening? It's been bullish, right? We're finally getting to the edge of that channel. Major resistance right there, but it's been following that trend line up. RSI is looking bullish, right? And if it can break out of this channel, break above that support level, or I'm sorry, resistance level, and then turn it into support, right? Flip it. Then, yeah, I can definitely see that happen. There's a lot of room to go up, right? I'm going to skip number 2. Feel free to read it and figure that one out. Number 3, short the U.S. dollar, okay? And this kind of leads into why they're going into the bonds anyway. But as you can see, as the dollar has been weakening, what's TLT been doing? It's been moving up, right? And so they're expected to happen once we top out at 5.25%. Yields to drop. Bonds, of course, can go up because yields are dropping. And the dollar is going to weaken as inflation comes down and yields come down. And so that's why they're shorting that. So it's kind of a two-pronged approach, I guess you could say. And so, and you can see, I mean, it's holding on to that support level right there the best it can. But if that breaks, you know, we'll see where we go. Long China stocks, talked about this in yesterday's videos, where a lot of big money moved into. But of course, guess what? They're still doing lockdowns now. They're sitting here having protests. Shocker there. Long gold. As the dollar weakens, that's when you'll see commodities get stronger. Gold being one of those to move up. Also look for crypto to move up as well when that happens. And going to number 7, long global industrials and small caps, right? And so small caps always get hit usually first and somewhat of the hardest. And you can see right here, you know, IWM, this is the weekly. This is trying to form a stage 1, right? Coming out of stage 4. This is the 30-week moving average we base it on. And you see it's trying to. It's got 3 or 4 weeks under its belt above that. But this is something that takes weeks to months to actually form, right? I don't have an entire channel designated for this for no reason, right? Stage 1 forming, which this will go away when we come out of obviously a bear market and everything. But, you know, I put all these in there every time I find one that's trying to form to see what happens, right? And so then, of course, short U.S. tech. And so this is a big one. You'll have your run-ups or run-downs. But it says the old leadership still over-owned. Era QE is no longer. Because why did big tech go up so fast? Because a lot of free money, cheap money, stock buybacks, all that fun stuff, right? And then you can read number 9 if you want to. And then number 10, long EU banks, short Canadian, Australian, New Zealand, and Swedish banks. And I don't really deal with the banks too much, so feel free to, especially foreign banks, I don't do any of that stuff, so I'm not worried about that. But a couple of those, yeah, I mean, I look at that and go, yeah, it makes sense, right? It makes total sense. And so, you know, the one thing they're not saying, oh, the market's going to go straight up, because the market, look, everything's going to be a recession next year, right? If that happens, and there's a really bad recession, odds are the Fed's going to do a pivot. Right? At some point in time, they're going to stop raising rates. They just can't raise rates into oblivion just because we have to still service the debt. That's always a big thing. We were talking about that in Discord today, and that's true. You know, I'll be the first to admit they went higher. They're going to go higher than I ever thought they would, because the amount of money it's going to take to service this debt now is just, you don't even want to think about it. It'll make you sick. I mean, obviously we're not really paying it because they're putting on the credit card. Eventually, maybe we'll pay it. Who knows? But it's just it's brutal. It really is. I mean, it'll be. I think somebody said like as high as our more than our defense budget, which is huge. I think it's 700-800 billion a year, if I'm not mistaken, just in interest. I mean, that's crazy, right? When you think about it. But so that's something to think about. Food for thought. I'm looking towards 2023 already, right? I want to go ahead and get prepared and see what's happening. It's somewhat hard to do that when you don't know what the Fed is going to do, because you fight the Fed, you're going to lose every time, as you can see. And if you listen to them today, I mean, and don't forget, the Fed president speaks on Wednesday at some school, I think, or some events. We'll see if that's even televised or people pay attention to it. But as they speak, it literally comes across Twitter right away, and you can see the markets reacting all over the place, right? And something I thought was interesting, a couple of things actually, was what's coming out of the White House right now. So now all of a sudden, they issue Chevron this permit or whatever it is to go to Venezuela to drill more oil and bring it back to America. But on top of that, they also come out with this right here. It plans to offer hundreds of thousands of acres off the coast of Alaska for new oil and gas drilling next month. And so I thought that was interesting. And I'm not surprised by it, because I think they realize, one, they have to buy a whole lot of oil back to put in the reserves. But the reason why I wasn't surprised when they said Alaska, is because out of sight, out of mind. Right? I mean, what major news ever comes out of Alaska? It's kind of hard to go all the way to Alaska to protest, right? Versus if they did it in Texas or some other state here, it'd be pretty easy to do, right? And so that's kind of I guess they're trying to do whatever they can to try to get oil prices down. We'll see how it works out and see how it goes. Let me know what you think down in the comments. But yes, because a lot of people are like, wait a minute, I thought we were going green. It's like, I've been saying for years, you can go green, but you got to do it gradually. Okay, you still got to have oil. That's just the way it is. Get over it. And just learn to live with that. But you go to another source gradually, not overnight. And you can see what happens when you try to do that. I'm talking about anything in life, for that matter. All right. And the other thing was, as I put in the morning news brief, if this is true, again, I don't know if it's true. It's a survey that came out, but this is, and I told the members to watch this closely. A report that came out this morning, actually, 45% of Americans earning more than $100K now report living paycheck to paycheck. When you talk about all Americans, about 6 in 10 Americans were living paycheck to paycheck in August, according to a recent report produced by commerce data platforms Payments and personal loans website Lending Club. Although wages have been increasing in general, they haven't been increasing fast enough to keep up with inflation, according to an October report from the Federal Reserve Bank of Dallas. For a majority of employed workers, the median decline in real wages when factoring in inflation this year is over 8.5%. And so if that is true, 2023 is going to be really interesting, guys. And I don't know, let us know in the comments if you're one of those people, if you know people like that and say, yeah, I think that really is true, because it's okay now, because again, people have jobs. The labor market's still strong. People are still getting raises, and people still can't find enough employees for their companies. All that stuff, is okay. That's what makes everything okay. But if we do start to hit rough times and all of a sudden here comes the layoffs, remember I've showed you what's happening in the personal debt. It's rising, right? And one saving grace is going to be the fact that a lot of these people won't have to pay student loans. And that's what I was talking about. That stat, the first thing I thought of, as you hear the crows, sorry, I can't stop them crowing. You sit there and you think to yourself, wow, what if people, because a lot of those people will be included, had to pay that $300 student loan, or maybe it's $150 for them, maybe it's $500 for them. Maybe they have multiple students in the family, right? If they had to pay that, what that would do to people. And so if that ever kicks back in, if we ever had to pay student loans back again, it's going to be rough. I mean, let's just be real. It's going to be rough for a lot of people. Okay. And if we hit a real recession next year, man, because the thing I always tell you is, don't think about just America. We're talking about, this is the first time I can remember, even reading history books, that you're talking about a global recession, right? I mean, all these countries that have tightened to the hilt, all these countries that are having high energy prices and stuff like that, for the first time, I don't know how this plays out. No clue, and we are a global economy now. It's not just us, right? So if other countries are suffering, especially big countries that buy stuff from us, that buy stuff from Apple and Microsoft and all the big ones, right, then it's really going to affect things. So, we'll see how that plays out. I don't think that gets talked about enough at all. And I guess I need to try to research and see if I can find anything, and see if it's ever happened. You have this many major countries that are either in recession or going to go into recession, most likely. And so anyway, if you happen to have any sources, let me know in the comments. Hope you got some out of it. Hit the like, subscribe button. Really appreciate it, guys. And I will see you tomorrow.